Hi everyone, I'm Rajat Jaiswal and today we are going to discuss something you're probably seeing everywhere else these days. That is tax saving. We all know that no matter how hard we work, a huge chunk of our income just seems to vanish into taxes. It's frustrating, right? Imagine you are planning for a dream vacation or probably saving for a house, a car, or maybe something else. But then out of the blue, out of nowhere, you need to pay your advance tax. A big part of your income is gone into taxes. Well, don't worry because today I'm going to show you exactly how you can save up to 1.5 lakhs in taxes legally. Yes, I'll try to show you some of the tips and tricks, some of the strategies which you might use, which can help you to save your taxes. By the way, if you are new to this channel, don't forget to hit the subscribe button. And if during the video, if you feel that you like this video and if you want more such videos, then don't forget to give a thumbs up. Let's start. So before we dive into the strategies, let's first understand the key changes brought in by the 2025 financial budget. These changes create new opportunities for tax savings, and it's important to know what's different this time. The first is higher tax-free limit. Under the new tax regime, income up to 12 lakhs is completely tax-free. Plus, with the new standard deductions of Rs 75,000, salaried individual can now enjoy an effective tax-free limit of 12.75 lakhs. So here's how the revised tax slabs under the new tax regime looks like. The basic exemption limit has been increased by 1 lakh, and any income which is above 24 lakhs, that will only get taxed at 30% versus 15 lakhs which was there previously. It is a big advantage even for a big businessman. So you can look into the screen, the comparison of the tax slab which was there previously under the new tax regime for financial year 24-25 and what will be there for the next financial year 25-26. Additionally, the tax rebate under section 87A has been increased to Rs 60,000, which will in a way ensure that you will not have to pay any taxes for the income up to Rs 12 lakhs. So although people are saying that they don't have to pay taxes till 12 lakhs, in a way they're saying that you will be getting the rebate of it. There has also been a change in standard deduction, as I've mentioned earlier, that the standard deduction limit has been increased from 50,000 to 75,000 only for the new tax regime, and this is only applicable to the salaried taxpayers. So these changes bring a lot fresh opportunities to lower your taxable income, and we'll be talking about exactly how you can make the most of them. Now let's dive into the step-by-step tips that can help you save 1.5 lakhs in taxes. Don't worry, these methods are completely legal and they're easy to follow also. So even if you're not from a finance or a technical background, you'll be able to understand all of these tips and tricks. Step 1 is know your tax regime. This is very important because last year a client came to me. So he had already filed his ITR as per the new tax regime. But when we actually calculated and took into considerations the deductions and the investments, we found out that the client could have saved at least 40,000 in taxes. So first off, you need to decide whether to go for the old tax regime and the new one. I've already created a calculator for it. I leave the link of that calculator on the description. You can just download it and you can see which regime will be better for you. So choose old regime if you have deductions, investments under section 80C like under PPF, ELSS, life insurance, or if you have HRA deductions, or if you have LTA or the leave travel allowance. Some of them might be relevant to you, some of them might not be. So if these are there, then only you need to evaluate whether you need to go for the old tax regime or not. For new tax regime, it's quite simple. If you don't have any investment, don't have any such kind of deductions which you can claim, always and always go for new tax regime. It's a no-brainer. And also you don't have to pay any tax till 12 lakhs. Also, just a tip, think of choosing a regime like a shopping. If your cart is already full of tax saving investments like PPF, life insurance, etc., the old regime will give you more savings. But if you want a simpler and quicker checkout, the new regime with lower tax rates might be a better choice. So it's up to you. Whether you are doing the investments or not, it's completely up to you. Step 2. Claim the standard deduction. Many times what salaried people do is they often forget claiming that 75,000 standard deduction, 50,000 which was earlier. And even businessmen can save their taxes using the standard deduction. So what they can do, they can show themselves as an employee into their venture, and then they can take a fixed salary from the venture. Using that, they can claim the 75,000 rupees as standard deduction. So they can show both income from salaries and also income from business and profession. So that is completely legal and that is allowed. Even I do it for my venture. So you can also do it. And in case if you have any doubt, any concerns regarding any of the topics which we are going to discuss today, feel free to drop it in the comments. Step 3. Optimize your investments under section 80C. Now let's talk about 80C in detail. So you can skip this section if you are under the new tax regime, but for those who are under the old tax regime, this is for you. So as you're aware that you can invest up to 1.5 lakhs in tax saving investments like PPF, ELSS, life insurance premiums, principal repayment of home loans, etc. etc. In addition to this, you can also claim 50,000 under NPS, which is the new pension scheme. This many people are not aware of and many people don't invest into this instrument. There are various pros and cons of this instrument. If you want me to make a detailed video on whether you should be or should not be investing on NPS, just drop a comment and I will surely make a video on it. Step 4. Leverage additional deductions. Pretty sure you must be having a health insurance in place. So the premium which you pay for that health insurance, you can claim it under section 80D. So many people often forget to claim this deduction, but you can claim it for yourself and your family. So even if you're not paying premium, you can claim 5,000 rupees for preventive health checkup. That is completely legal. It's just that you need to keep some medical invoices in place, some medical bills in place. Step 5. Utilize the home loan benefit. Well, I'm pretty sure that if you're planning to take loan, the first thing which comes into our mind is whether to take that home through loan or through entire cash. Well, many people like me chooses to take the home via loan. So what you can do is you can claim the principal which you are paying in 80C up to rupees 1.5 lakhs and the interest which you are paying, you can claim the deduction of the same under section 24 up to rupees 2 lakhs. Step 6. Don't miss out on HRA and LTA. So if you're living in a rented accommodation or traveling for work, make sure to claim HRA. HRA, for those who are not aware, that is house rent allowance. And LTA. LTA is leave travel allowance. These exemptions will help you reduce your taxable income a lot. Step 7. Reassess annually and plan ahead. Tax planning isn't just a one-time job. Every year, take some time to review your income and expenses. Use tools or consult a professional to ensure that you are making the most of the deductions which are available out there in the market. So if you're confused regarding any of the deductions, again, sorry to repeat, but you can just comment and I will help you out. So now that the theory is over, let's look at one of the example and see how it works. So let's say your annual income is rupees 20 lakhs. So after applying the standard deduction, 80C, NPS, everything, every deductions which you have, after applying everything, say your income starts at 20 lakhs, less 50,000 standard deduction, less say 80C of 1.5 lakhs, less NPS of 50,000 under section 80CCD. So that's the total of 2.75 lakhs of deduction which you can claim. Now, in addition to this, there are various other sections in which you can claim deduction. Like if you are paying tuition fee for your child, there are certain provisions around that which you can claim. Also, if you're paying donations to political party, also that I will not recommend it to you. If you're paying, then also you can claim deduction. There's a separate section altogether. Also, if you are buying a house under the affordable housing scheme, then also you can claim deduction. There is again a separate section altogether. See, income tax is a C. There are a lot of deductions, lot of avenues to save money. It's just that you need to know the right provision at the right time. That's all for this video, guys. If you found this video helpful, please give it a thumbs up and share it with your friends who might need tax planning advice. And don't forget to subscribe for more such financial tips. Drop your questions or any topics you would like me to cover in the comments below. Also, happy tax saving and I will see you in the next video. Bye.